on 16, because it's also very easy to find past the question for IFRS 16. But the IFRS 15 is to the extent it's almost every exam sitting also we can see one. So today I prepare quite some questions here for us to do together. And definitely in the month of revisions, month of November, we will see some questions. Definitely. The moment we bring out past the questions, we can see IFRS 15 questions already. Then today, if I got extra time, we can also start the lecture of IAS 19, employee benefits. So comparing employee benefits to IFRS 15, we still have more questions for IFRS 15, but we also can find questions easily, not that difficult, for IAS 19. So these are the three accounting standards that we need to be aware of. Then compare 19 to IFRS 2. There's next Saturday no class. The Hari Malaysia Day, a day after we don't have class. Then on the 24th, we start to do the IFRS 2. The 19 and 2 looks a bit similar because they both touch on the employee benefits. Compare 19 to IFRS 2, we get a bit more questions for IAS 19. We also get 2 but 19 is a bit more. So if you look at the 16, 15, 19, 2, right? The champion definitely is IFRS 15, champion for a lot of questions. The second, I think I might want to give it to 19. 19. Okay, 19. The third one is 16 and last one is IFRS 2. So these 4 accounting standards, I think if you know these 4 very well, right, you can score quite some high marks in the exam. Because if I simply grab the past question, right, I definitely can see a question either from here, or from here, or from here. Definitely can see at least one question. Okay, so now we start the IFRS 15 tutorial. Okay, so this is a notes, IFRS 15. Live, we completed part 1 of the lecture. Video, we completed the part 2. Now what we see is, look at the page 10 of the chapter, page 10. Everybody get ready, page 10. So roughly preview how many questions we have. First one, second one, number 3, number 4, number 5, number 6. Number 6 got 2 parts. So 6 questions, but we got about 7 parts here. 4 hours, we should have enough time. If you are lucky also, we can look into IAS 19, employee benefits. But no rush, no rush. We already got the time budgeted. We go, sorry, too far already. So we go on the normal pace here. To you, if you have anything to ask, please ask, okay? Don't just keep it to yourself. Now page 10, the first question, got 4 marks. To discuss how to account for the above transaction in the financial statement of car park. Right, so we are car park, to understand our position. Because sometimes in the questions, we have more than one company name. Let's say there's a contract, there's a sales, there's a purchaser, we have a buyer and seller, 2 parties. So you must always know who we are. As a heading called we collect. This contract will last for 5 years and ourselves will manufacture seat to certain specification, which will require the construction of a machine for the purpose. So it's a very typical real life question. We got a contract, we got to make car seat to sell. And in order to make the car seat, we have to construct a machine. Of course, we can choose to buy the machine now, but in this case, we can construct the machine at the same time. The price of each car seat has been agreed, so it includes an amount to cover the cost of constructing the machine, but there's no commitment to a minimum order of seats to guarantee the recovery of the cost of constructing the machine. Okay, so we got a contract to make car seat to sell, and to make the car seat, we have to make the machine first. So we got to do 2 things. Number 1, sorry, I hit the mic already. Okay, so we got to make 2 things. We got to make the machine first, so that the machine can help us to make the car seat. Then when we sell the car seat to the customer, we build in the selling price, we build in the cost of machine. Of course, not the one machine to one car seat, but we're going to do our costing calculation to absorb the machine cost to each unit of car seat, so that when the customer pay us, we can recover the cost of constructing the machine. But there's no minimum commitment. Okay, so let me underline here. There's no minimum no commitment to minimum order to guarantee the recovery of the machine cost. We retain the ownership of the machine and wish to recognize part of the revenue from the contract, which is selling car seat, to cover costs of machine which will be constructed over the next year. So in summary here is we have two things to make, machine and car seat, but we sell only the car seat. Now the company say, when I have the invoice to sell the car seat, I would like to show the revenue sale of car seat. This one I think no problem. And then even in the question also we didn't bring this up. The question highlighted that the company wish to recognize revenue to cover the cost of making the machine. So that means they also want to put a sale of machine. Okay, they are not talking about timing here. If you read the question again, it's not talking about timing, that they would like to recognize the car seat at one point or a little bit every month. No, they're not talking about that. And I didn't see the problem is on allocating the transaction cost. They say they're not sure how to allocate the invoice price partly to car seat, partly to machine. No, they didn't raise this up. They just say they want to recognize the revenue, part of the revenue from sale of machine. Okay, so forget about all these technical words, difficult words in the accounting standard. We try to use our own words. Do you think car park, which is us in this case, can recognize revenue from sale of machine? The car seat confirm can. In fact, there's a main contract to make car seat to sell. But how about sale of machine which they wish to make? Maybe you can take some time to think about it. Feel free to start the discussion. If there's anything not right, we can always correct it. Why there's no response at all? Okay, look at the chat box. I repeated the question. If you have some thought, just share it out. Because this is not the correct behavior in the exam. Just look at the question, keep quiet. Imagine if this is a real exam and you are struggling to get at least 1 mark from here. Okay, okay, Kartik said no because it's not their business nature. Kartik, how do you know the business nature of car park? I mean, what is their main business? Did the question mention their main business? Do they only sell car seat? They are not selling machine? Is there any part of the question mention that? Because I didn't see from the requirement nor in the question itself talking about the type of business or the nature of business. So this point, I think I cannot accept. But maybe I help you a little bit. I help you a little bit. Okay. So when you pay the fees to the college, now let's assume you attend physical class. I know we have been attending online classes for years already. Okay. But let's assume that you're attending physical classes. Recall back your memory like before COVID time. Okay, you pay fees to college. Will the college factor in the PPE cost when they charge you a school fee? So I know they got the costing to do, right? So they have to factor in the lecturer salary. That's first thing. Printing cost. Do you think they also need to factor in the building cost, furniture, table and chair cost, computer cost, projector cost, aircon cost, and also the utility bills, water, electricity, internet? Do you think they will factor in all the costs when they are coming up with a fee structure? Let's say you sign up for ACCA paper is 1,200 ringgit per paper. So do you think those fees will include the PPE cost? Yeah, I'm sure they will as well. That is how when you study cost accounting last time, the makeup of material costs, labor costs, and also overhead. So once they got the production cost, they also need to factor in non-production costs before they come up with a pricing. So how to calculate pricing? Yeah, that's true. That's true. Okay. So do you, as a student, have a commitment to recover the cost of the college building? So let's say you sign up for only one paper, you study ACCA, only one paper, you pay 1,200. Can the 1,200 cover the cost of building? So do you have that commitment to recover the cost of the college building? It's quite a simple question. And the answer is no, right? Okay, so now the conclusion is so that means although the college factors in the building cost, let's say, got furniture and everything all in, okay, into the fees, they are not selling you they are not selling you the building. They do not hope that you can recover as an individual. They do not also hope you alone to recover the cost of the building. So the building can be used for many years. Let's say they're going to occupy the college building for 35 years. So it is over 35 years and over many students, each will contribute a little bit here and there to recover. So we are not actually selling your building. We are not actually selling your table and chair as well. Because if you got a chance to come to the physical class at the GO office at the moment, most of the time we only got Shubha and Jeng Hong occasionally will turn up. And we are in the class that can fit in, I think, roughly about 20 to 25 students. But most of the time it's only me and Shubha or sometimes Jeng Hong or three of us in there. Definitely will not be enough to cover the furniture cost. So the college is not selling you the furniture. Okay, so based on this point, you can always can get some bugs, And if you remember some technical points, okay, let me show you my notes. It's actually reading to part one, identifying whether we have the contract to sell something to customer. As I say, the car seat definitely no problem. We have a contract to sell car seat, but now the company argue they want to recognize revenue from sale of machine as well. I don't see at least this point. There's no one having commitment to complete the transaction. The customer can stop ordering the car seat at any time, and then we will not be able to generate enough revenue to recover the machine cost. Maybe not from this customer, so we try luck from the next customer. We try to find new customer. We order car seat. Then we kind of use that machines. So the machine is our PPE lah. It's not a subject that we can sell. There's no commitment from either party to complete the transfer. Okay, that's great. Let me show you the answer lah. Okay, you can take out a blank paper and start to take down the answer. Now, turning back to English. Page 10. Okay, proving there's a contract is only one step of the 5 lah, among other criteria. Must be committed to complete. Yeah, I think you have finished this already. Yeah? If you need more time, please let me know. Now let's imagine this is in the actual exam condition. actual exam environment. And this is a very good answer because we managed to identify the main point. First, we settle their problem, their concern first. Here, back to the question. This is their concern. Wish to recognize revenue from sale of machine. So we already answered that. This is very important. We must always focus on this first, which we have done it. Now, in the exam, I think majority of us will probably stop at this point and then move on to the next question. But actually, we can still talk about one more thing, which I think majority of us will overlook that matter. Overlooking on that matter is not a problem because we already got good marks here. For formal question, if you're not getting 4 from this answer, we at least get 3, which is 75% already. Very good already. But if you can identify one more point, which the question actually came to us as well, coming back to here, you get marks as long as you are discussing relevant points in the question. You don't discuss irrelevant point. Let's say we talk about revenue, right? Yeah, revenue, we got 5 steps. 5 steps. So you talk about this one, talk about this one, this one, this one, this one. You don't get marks for talking on step 2 to step 2 to step 5. You don't get marks because the focus of the question is on step 1 only. So while you're still talking about revenue, but 2 to 5 they are irrelevant points. Irrelevant, you don't get marks, right? So what is another relevant point is the machine itself. Now we already deny that there's a revenue from sale of machine. So the machine will remain as a PPE. If it is not a subject to sell, then it will be PPE then. It's not inventory, it's a PPE. And probably car park will depreciate the machine over 5 years now, assuming that the machine has only 5 years life. So that will ensure you always get the 4 out of 4. If the 3 paragraph here at the moment not giving us 4 marks. Okay, so let's see. Okay, let's move back to the question. Number 2, second question. It's quite a long thing here. And we get 7 marks. Now, if you look at the question, I think I told you a few times before as well. Every question must have a main requirement, which they'll put at the bottom, the most bottom of that question. And then they will bold it, okay, dark color, main requirement. And not every question, but some question will have sub requirement. So when you look at the second question here, I didn't include the main one because we already have a very meaningful sub requirement inside the question itself. So the sub requirement is more important than the main requirement. And do look for one if you have a sub requirement. Director wish to know how to account for penalty, counterclaim, and additional cost in accordance with IFRS 15. So there are three things that we need to discuss. For the 7 marks, let's say we plan 2 marks to talk about the penalty. One could be too low, 2 or 3 might seem quite reasonable. Then we have another 2 for counterclaim, which I don't know what it is at the moment. I got to read the question to find out. And next one is the additional cost, which I also do not know what it is. I have to read to find out. So if I plan like this, I can get roughly 6 marks in my pocket already out of 7, which is very good. You want to push for 7, okay, no problem. But aiming for 6 out of 7 is also a very, very good thing already. So with this technique, right, you feel safer. Rather than asking you to write full 7 marks out, it could be a bit stressful. But putting 1 or 2 out, 1 or 2 out, 1 or 2 out, psychologically you feel that it is still possible. And why not, isn't it? 1 or 2 marks only. So let's read the question to find out details for penalty, counterclaim, and the additional cost. Carsoon seems like us. Construct retail vehicle outlet. So these are buildings. So our main business is to construct building and then to sell the building. Enters into contract with customer construct building on their land. Construct building on their land. Okay, this one I got something to say. In the last class, we talked about transferring control to the customer. Only after transferring control to the customer, then we can recognize revenue. But transfer control, we have 2 types. Number 1, transfer control at one point. And number 2, transfer control over a period. I remember I used our class situation as an example as well. So the college, when they deliver the notes to you, that is at one point. So they do not pay a few pages to you every class, ask you to take only that few pages. So they deliver the set to you, the book, the notes or whatever to you, and that's it. If let's say you lost the book or you lost the note and you want to get a replacement, you got to pay again because they already transfer control of the notes or whatever material the books to you. But for classes, it's over the time because our classes are conducted on a recurring basis. Every week we meet each other unless there's a holiday. Otherwise, every week will be routine and recurring. So classes will be over time. Another thing to recognize revenue over time is if the performance is done at the customer side. So this is mentioned in the question now. We are constructing retail outlet on the customer land. So if I need to discuss the timing of revenue recognition, I will mention this is revenue recognized over time. Okay, so let's go back to the question now. The contract has standard term which include penalty payable. Okay, this is my focus here. Now, should we straight away, when we see construct building on their land and then we talk about revenue to be recognized over time instead of at one point? Maybe no, class. You see, sorry. If I look at the sub-requirement, right, they would like us to focus on penalty, counterclaim, and how to recognize the additional cost. So I may not have the room to discuss that revenue is to be recognized over time. That is not one of the matter that we need to discuss in the sub-requirement here. If you put that in, let's say you read, okay, we're going to construct retail outlet on the customer land, I should read my answer. Revenue from the construction should be recognized over time. We may not get marks because that is not what is required at the moment. We talk about the main thing first. There are 3 things that they are requiring. So now penalty is one of the things that we need to discuss. Penalty payable by us if construction is delayed, or payable by customer if we cannot gain access to the construction site. In the T&C, some of the T&C say if the contract is delayed, we have to pay penalty. If we cannot go into the construction site, the customer have to pay the penalty. Due to poor weather, one of the project was delayed. Now, if there is a delay, we have to pay penalty. As a result, we face additional costs and contractual penalty. I think this is the provision here. Okay, additional costs and penalties. Because we could not gain access to the construction site, the director decided to make a counterclaim against the customer. We are facing now, based on terms and conditions, penalty we got to pay. So that's why I propose to recognize a provision here. But because we cannot gain access, inside the terms and conditions also we're allowing us to make a counterclaim. So this is called a contingent asset. It's always like this. When people claim us, it's our provision. When we are trying to claim other people, that is our contingent asset. The probability of recognition is different. Provision we recognize as long as it's probable. For contingent asset, we recognize only if it is virtually certain. We felt that the claim, because the claim had been made against the customer, the additional cost and penalty should not be included in contract cost, but to shown as the contingent liability. Oh, so that means they do not want to recognize that this is not allowed. Okay, why is it not allowed to treat the penalty as contingent liability? Because if you want to treat the penalty as a contingent liability, then you do not recognize already. We don't recognize contingent liability, we only disclose it. The argument is we have made a counterclaim, so we do not need to recognize the provision. Because whatever that we need to pay might be ultimately recovered from the customer. But I think it is not appropriate because these are actually two different things. Number one, the project was delayed. That is confirmed. Based on the terms and conditions, if the contract is delayed, okay, let me underline this one more time. If the contract is delayed and they didn't mention reason or whatever, if the contract is delayed, Karsum will have to pay penalty. So this is one event, one economic event. Another event is if we cannot gain access to, we cannot enter into construction site, then the customer will have to pay the penalty. So now the delay is caused by we cannot enter into the construction site. It's like conflicting to each other, isn't it? We delay, then we pay penalty, but because we cannot go into the construction site, we can ask the customer to pay the penalty. So from what the little information I see from the question is that these are two different things here. Although it's caused by the poor weather, but these are under some conditions, two different things. So you should actually recognize the provision first, and you may not actually be able to get the counterclaim. It's always like that. When we need to pay under the terms and condition, we don't pay. When we claim back, right, it all depends whether we can claim in or not. Right, so they still have to recognize the provision for the additional cost. Kasun has assessed the legal basis of the claim and feels that it has enforceable rights. So this is the matter of judgment. Should we recognize the counterclaim, the contingent asset? We feel that we have enforceable right. But based on the accounting standard, we only recognize the contingent asset when it is virtually certain. So your feeling is actually not virtually certain yet. Now, you may call it probable, you may call it highly probable, but it is not virtually certain yet. You feel that you have enforceable right. So we suggest here is, let me type something to the chat box here. We suggest the penalty. You recognize that provision. Okay, look at the chat box there. Penalty. Provision. Counterclaim. disclosure only. You don't recognize the counterclaim asset yet. Disclosure. It's not virtually certain yet. Okay, talking about the provision, penalty, right? Okay, look at this. So I will credit a provision liability, and where do I debit to? Everybody look at the chat box. So I'll credit a provision penalty, a provision liability, but where do I debit to? Do I debit to contract cost, which is cost of sales, or do I debit to other expenses? Okay, Shubha say contract cost. Anyone else have any thought, any opinion? Karthik say other expenses. So I would like to hear from both of you. Shubha, what do you say is contract cost? And Karthik, what do you say is other expenses? Appreciate if you guys, when you give me the answer, is accompanied by explanation. Because with just 2 words like that, I don't know whether it's a wild guess or you really know the answer. So let's hear from Shubha and Karthik, their own reasons, explanation, why one say contract cost, why one say other expenses, which are contradicting to each other. Okay, Shubha said the penalty incurred on the basis of a contract, therefore it is a contract cost. So based on Shubha explanation is anything related to the contract will be contract cost. Karthik, how about you? You say other expenses. Karthik say because provision is not certain, so recognized to expenses. Um, so if I follow Karthik's explanation is provision will always go to other expenses. Cost of sales is also an expense, but cost of sales is a direct cost then. Alright, so let's go back to the basic. Look at the chat box here. I suggested two debit entries. One is debit contract cost, which is cost of sales. Another one is debit other expenses, which is not cost of sales here. So this actually relates back to our last class discussion that if the cost is the direct cost, directly attributable to the construction, and if it is a construction overhead, like protection overhead as well, then they can be cost of sales. So I remember we got a table. Let me find the table again. This is the table here. We got blue on the left side, and what color is this? Light maroon or something on the right side. Okay, let's look at the blue color one. These are the cost of sales on the left side. Direct labor, direct material, protection overhead like depreciation and amortization, costs that are written in the contract that the customer will have to pay. And finally, other costs because entity entered into the contract, like for example, subcontractor costs to enhance our resources. So I read through the examples here and I didn't see penalty is inside here. So I think it is not a penalty. Penalty should be on the right side, which could be termed as cost of wasted contract cost. Penalty wasted already. And it's not showing any progress. You pay penalty, but there's no progress to the contract here. So that would be my explanation. provision has to be recognized but cannot be debited to cost of sales, but should be debited to other expenses. So it's not like if the cost relates to the contract, then it must be a contract cost. That is too general. We still need to look into whether the cost paid will ultimately contributing to the progress of the construction. That is something that we and to cutting explanation also not quite accurate. If it is not certain, then we put our expenses. That's not quite true as well. So the key here is whether they are part of the production cost, whether they're part of the consumption cost. If part of, then it can be cost of sales. If it is not, then it becomes other expenses. Maybe I start to write something now. Long question. I don't want to read everything to the end. Then only start writing my answer. But I still do not want to talk about revenue recognized over time yet. Because the focus should be given to penalty and counterclaim first. Correct. So back to the answer area now. Okay. Okay, I think you have done this. Let's go back to the question now. So I got the first half of the question covered. We managed to talk about penalty, we managed to talk about counterclaim a little bit here and there. And let's move on. In the year ended 28 February 2017, so the year end date, Carson incurred general and admin costs of 10 million, costs relating to wasted material of 5 million. What do we do with these two figures? General and admin costs. The CEO salary, for example, accountant salary, the office maintenance cost. Wasted material could be due to wrong design or wrong planning, or while doing construction got accident happen, so some material wasted or whatever, 5 million. But what do we do with these two? Let's read further. Additionally, which seems like another case already, during the year, we agreed to construct a storage facility on the same customer land for $7 million revenue and the cost of construction 5 million. So party agreed to modify the contract to include the construction of the storage facility which was completed during the current financial year. Okay, so this is totally a different case then. While we are still thinking what we should do with this general admin cost of wasted material, the questions start to talk about, hey, we got a contract modification. We decided to add in new asset, which is a storage facility on the same land for the customer. So I see that this paragraph, this one, should not be helping me to talk about this. Hang on, they got something extra here. All of the additional costs relating to the above were capitalized as an asset in the financial statement. Capitalized. So that means that also capitalized 10 million as an asset, and they also capitalized this 5 million as an asset. Oh, very interesting. So can the company, capitalize admin 10 million, wastage 5 million? They have done it. Okay, they have done it. So I'm here to check with you. Can the company capitalize admin cost 10 million? Cost of wasted material, another 5. Okay, no. Wasted material is a no. Okay. How about admin? Shuba say wasted material only. Okay, wasted material is a no, which we have learned from the previous discussion just now. Admin can? Admin. Okay, admin no. Depends on type of expenses. General admin cost no. Okay, Shuba, let's look at this. Your answer is a bit different from the rest. We have this table to visit again. General admin, there will be expenses. Unless explicitly means written in the contract, which I didn't see from the question at the moment. So our first response on general admin cost will be expenses. And then cost of wasted material will be expenses as well. So let's go back to our answer to deny the company action of capitalizing general admin cost and the wasted material cost. Okay, just one sentence for that small paragraph. Then we go back to look at the contract modification. They are changing the terms and conditions. Okay, let's move on back to here. Okay, they modify the contract now. Original contract is to construct a retail outlet for the customer. Now, maybe during halfway, we decided to change the contract to include a storage facility. Okay, now, can you look at the chat box for a while? Contract modification means it's the same contract. Okay, let's see. So it is still one contract, right? They didn't sign a new one. They are modifying the existing one. A lot of time, right? This will be done through a VO, variation order. So we didn't change the wording in the original contract, but we are coming out with a new paper, which is called a variation order. Okay, VO in construction, this is very common. When there's a change in the scope, when there's a change in design, when there's a change in the cost, when the contractor want to claim the customer a little bit more, so they will discuss and come up with a variation order lah. So from legal perspective, we do not see variation order as a new contract. The VO is still for the one contract. It is still there, but we have supplementary or sub-condition, new one to be included inside the same one contract. But in accounting, we follow substance over form. This is always very important, substance over form. Meaning, even though the modification is still regarded as only one contract, we will account for the outlet and storage facility, which is the warehouse, as two different sales if the are different. Now, spend some time to read the messages in the chat box here. Okay, spend some time to read. And then I rediscuss this again, go back to the question to decide what we're going to write. Okay, check this out again. There's a modification, contract modification, but it's still regarded from legal perspective as only one contract. However, in accounting, we don't care about the legal form. We care about the economic reality. If we see the situation that the storage facility, which is a new asset coming in, and also the outlet, which is the existing ongoing construction, are two different things, then we got to recognize two different sales already. That means plus, if you got two different sales, currently the vehicle outlet construction, if let's say it is already 70% completed, 70%, then we'll recognize revenue of 70% from the retail outlet. 70%, yes. And then the warehouse, storage facility is a new one, right? That means we haven't started anything at the moment. So there will be 0% revenue from the storage facility. Now, that is how we do for two different sales. Now, if you say the storage facility is actually an extension of the vehicle outlet extension, then we do not account for these two as two different sales. We account for this as only one sales. If it is only one sales, right, we will modify the retail outlet total revenue and the retail outlet total cost. After that, we recalculate the percentage of completion to recognize only one revenue. All right. So if two sales, the existing construction on the outlet will have its revenue recognized based on the percentage of Yeah. Now read my messages to the chat box. If two sales, existing construction will be recognized based on percentage completion, and the new storage. So the new one is 0% now, so no revenue then. Okay, continue to read. I got new messages there. Continue to read. Okay, after you finish reading, I need you to tell me what you think. Are they two different assets that we got to recognize two different sales? Are they one common asset that we only recognize one sale? Forget about the difficult words in the accounting standard, difficult knowledge. Just use your accounting knowledge. So what you have learned so far, and based on the logic, do you think these two are two different assets that we need to recognize two sales, or only one that we recognize only one sales? Appreciate if you tell me your answer and with explanation. Don't just say one, two, and then let me guess your explanation. Just give me your answer and your explanations at the same time. Okay, Karthik say two. Hang on. Because the construction of retail outlet and the storage is a separate obligation. Is there anywhere in the question hint to us that these two are separate obligation? Any particular keywords or something? The rest can also continue to contribute. Do you think it's one sales or two sales? Okay, so can you repeat the question? I'm confused with your content. Uh, you confused with the content is everything, or is there any particular point that you're confusing? Well, I'm still waiting for Karthik reply. Any keywords in the question telling us that the retail outlet and the storage facility are actually two separate applications. Shubha, can you on your mic and we talk? Do you have a mic with you? Okay, let's talk. Yes, 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 everybody can hear. Mm-hmm. Mm. Oh, I'm exploring options here. I do not know whether we should treat the two as separate or we should treat the two as one. Okay, if the two are treated separately, then we are continuing to construct the retail outlets, which we have been doing. Let's say we have completed 60%, 70%, then they want we just continue to construct and to continue to recognize the revenue up to 60%, 70%. This newcomer, the storage facility, if we are trading the storage facility at a separate stage, then the one is at 0% at the moment because we just modify the contract and we haven't started anything on the storage facility. So if we feel that the two are separate, then we will have revenue of 60% or 70% recognized on the retail outlet and the warehouse storage facility 0%. Okay, that is one possibility. Another possibility is if we feel that the vehicle outlet and the warehouse are combined as one, then we need to recalculate the total revenue because now we got extra revenue from constructing the warehouse, combine the warehouse revenue to the outlet revenue together, and combine the warehouse cost and the outlet cost together to come up with a new costing sheet to recalculate the percentage of completion. Now, with the new warehouse joining in, right, let's say we combine them as one, the progress shouldn't be 60 or 70% anymore because now we got more thing to do, right? So before we decided to take up the warehouse job, we have completed 60% or 70% on the outlet. Now, after combined with the warehouse, maybe the completion will drop to 43% because you see, we got extra thing to do now. And what we have done so far no longer represents 60% or 70% if we are deciding to combine the two as one. So do you get my point here? Okay. Also, you off your mic already. Still waiting for your voice. Uh, okay. Oh, okay, okay. You should mute your computer first. Okay, now let's look at Karthik. Karthik replied me already. I think so because they mentioned to modify the contract to include the construction of storage facility. This is not a strong point to argue that we have a separate things to do. Now, what I think is that we don't really have a lot of information in the question, but what I can think of is we already have a retail outlet, which is basically a showroom. You look at the screen here. This is a showroom, vehicle retail outlet showroom. And on the same land, we have to construct a warehouse, probably for the showroom as well. Even though we do not have enough detail to really to argue to deeper, but it seems quite nice to combine these two as one because the storage facility could be an extension and some more is constructing on the same land. Okay. Uba also say we can combine as one. Singyong say one sales because the storage is part of the outlet. I think it can be considered as one asset. Okay, so Singyong is also making the same point as what I have made just now. Now, maybe to Karthik, you look at the question. Let's say you go to the exam this time, December, let's say, December exam, you see a similar question, but now the modification is they're going to introduce a new construction, new asset on a different land and for different nature. What is different nature? The original contract is to construct vehicle outlet. The modification is to construct a head office. So head office and retail outlet, I don't see any close connection of the two. And some more, if the question say, the modification will result in a new head office. So originally it was an outlet could still continue. So they modified the contract to add in the head office and on different land, another place. Then the one is easier for us to argue that there are two different sales here, that we need to recognize the progress differently. The existing construction already got 70%, recognized revenue 70%. The new head office, not yet starting, 0%, no revenue for that. So to this question, I think we combine two reasons. Number one is a warehouse that it seems like to be used together with the outlet. And number two is on the same land. So easier for us to argue that it is actually one total combined thing. Okay, looks good here. Let's look at the answer here. Now you notice my answer, I try to be a bit more open-ended here. I continue to use a very careful if this is the case. But seriously, we do not have enough details from the question to let us make a more convincing conclusion. But just on the surface, I think it is correct to argue it this way. It's the warehouse of the outlet and it's on the same side. So probably just an extension uh, of the outlet. Okay, completed, I think. Let's move on then. If you need more time, please let me know. Or if you have anything not sure regarding this question, you let me know as well. Okay, let's get going. Our next one. The requirement. We only have the word here. Oh, it's the requirement. Page 11, let's see first. This is us, verb. Advice verb on how the above accounting issue should be dealt with in the financial statement. The requirement is a bit special here. We got 2 year end to consider. 2012 where applicable and 2013. When you see this kind of requirement, the first year where applicable means this is optional. Not every part of the question will talk about 2012, but confirm they will talk about 2013 because 2013 they didn't put a bracket where applicable. So confirm is 2013 that we need to discuss, but 2012 is depending on the situation. If the question talk about 2012, then we also talk about 2012. Okay, so what's wrong here? We enter into a contract with a government body on 1st April 2011. 1st April 11. Now, if 1st April 11 to March 12, that is a 1 year gap. To March 13, there is a 2 years gap. 1 year gap, 2 years gap. So like 2 years ago, from 2013, to undertake maintenance services on a new railway line. If it is a maintenance services, right, I believe this is routine and recurring then. So routine, routine job will recognize the revenue over time. The total revenue from the contract 5 million over 3 years. So this is over 3 years. I don't think we can use straight line lah. Anyway, I'm going to read the question to see whether they can. But the proper way of recognizing the 5 million over 3 years will be based on percentage of completion. The reason is because this is a routine performance. So we cannot recognize the 5 million at one point. We're going to break the 5 million into year 1, year 2, year 3 based on percentage. The contract states that $1 million will be paid at the commencement of the contract. Although invoices will be subsequently sent at the end of each year, the government will only settle the subsequent amount owing, which is the balance of 4 million. Because at first the government paid 1 million first. Every year we send them invoices, but the government will only settle the balance 4 million when the contract is completed, which is end of year 3. Okay, now listen carefully here. The timing of collecting money, is not important to judge the timing of recognizing revenue. We can perform the job not collecting money, but we still have to recognize revenue. So the timing of recognizing revenue will not be affected by the timing of receiving money. So in this case, at the commencement of the contract, we get $1 million. So before we start job, we get $1 million. Then we work for 3 years. After 3 years, only we get the balance 4 million. But it doesn't mean that we're going to recognize revenue on this pattern, right? We don't recognize revenue in day 1. After that, 3 years later, we recognize another round revenue. No, we don't do that. We recognize revenue every year based on percentage of completion. Okay. However, the timing of receiving money will decide whether we need to calculate discounting, present value discounting. In this case, we have to because if you see, we got $5 million revenue in total. We only collected 1 million at the commencement, and the balance 4 million we will collect only 3 years later. No? So for such a long credit period we given to the customer, we can argue that there's a significant financing component factored inside already, which we need to separate out our interest income. And I'm sure they will give us a interest rate lah, for us to calculate the present value discounting. So perhaps I want to start to write something before we go too far. So I'm going to talk about it is a routine performance. We're going to recognize revenue over time based on percentage of completion. And then the timing of receiving cash from the customer, which is the government in this case, will not affect the timing of recognizing revenue. However, it will affect the measurement because we need to calculate present value discounting. Next to page 9. Good. Okay, I think I've done this. If you need more time, please let me know. Let's move back to the question now. Okay, now they are showing us the invoice amount. Invoices sent by us to date. To date means accumulated. Next time when you start working, or maybe some of you already started working, and you join a construction company, property development company, or just audit firm alone you do lah. You should be able to see this word lah, to date, because they will send the bills progressively to the customer. And at every year end, we need to see the accumulated bills that they have sent. But to my surprise, in accounting, we didn't use the word accumulated bills. They use the word bills to date. Maybe this is the term used in the construction industry. So in accounting standard, we follow the construction industry jargon. But in accounting, this means accumulated. So accumulated invoices sent, including the $1 million above. So this $1 million means collected already, right? At the commencement of the contract, the government paid us $1 million. Well, as follows. So this 31st March 2012, which is the first year end, $2.8 million invoice sent. So inside this 2.8 million, we got $1 million collected. And we still got 1.8 million outstanding. Then the second year, we send invoice again, 1.2 million only, and this is also outstanding. Because the balance will be settled only 3 years later, right? So whatever invoices that we send out, more than that $1 million that we have collected, it will be outstanding. So these outstanding balances, we have to calculate the present value discounting because the collection will be in the long future. The balance will be invoiced on 31st March 2014. Now, the balance invoice, I think I don't want to discuss already because the requirement asks us to discuss only 2012 and 2013 and it's not covering 2014. Okay, so let's forget about that then. Which has only accounted for the initial payment in the financial statement to 2012 because there's no subsequent amount to be paid until March 2014. Now, only accounted for is wrong. Okay, so this is incomplete. You cannot only accounted for the $1 million and you didn't account for the balance invoice of 1.8 for 2012 and 1.2 for 2013. Okay, let's continue. Amount of invoices reflect the work undertaken in the period. Not always, but in this case, yes. What do I mean by not always? We send bills, we send invoices. A lot of time is based on the bargaining power. If we can bully the customer, we will bill the customer faster. If the customer can bully us, we cannot bill the customer faster. So billing is more like the matter of art. When they're discussing the terms and conditions, the contract, if we do that, we can bully the customer. We will set the terms and conditions to enabling us to bill the customer faster and collect faster. But to bill the customer faster doesn't mean that we construct faster. In accounting point of view, we recognize revenue only based on our progress of construction. So even though we can bill faster, it doesn't mean that we can recognize revenue faster. Okay, hope you can understand that. So to this case, we have a perfect matching. They say invoices reflect the work undertaken. So we can, in this question, use the invoice amount to represent the percentage of completion. In other question, we may not be able to do that. But this question, yes, it's exactly the same. Invoice amount means percentage of completion. So we want to know how to account for the revenue on the contract in the financial statement to date. To date means they accumulated. So far, have I discussed anything? Yes, I did. I talk about overtime. I talk about the need to do discounting. And up next is I have to calculate already. So the revenue to be recognized in respective years. Year end 2012. Collected $1 million. Okay, this is how many percent? Let's say 6%. Okay, can you pause for a while? Please pause for a while. Let's look at the calculation. At the end of year 2012, I bill them 2.8. 1 million already collected, 1.8 not yet collected. 1.8 will be collecting this at the end of 2014. Years, right? 2012 and already 1314. So that means we need to wait for 2 more years before we can collect the balance of 1.8. So do discounting for 2 years. It should have decimal places. Let me see. Right, for the 1.2, we got to wait for one more year, just one more year. 2014, we're going to collect that. So the discounting is only for 1 year. Okay, maybe we can start a bit of explanation here. I will say we're going to use the invoice amount to recognize revenue because invoice represent the profit. That's one. And then another thing I can mention is it is wrong for 2012 to recognize only the amount collected. So this error can be corrected retrospectively in the year of 2013. So if you found a mistake in 2013, then it should be going backward because this is an error in the client accounting policy. Go backward. Okay. And that's here. Prospective. Okay, you may choose to stop at this point in the exam because we only have 6 marks for this question. 6 marks is like 10 minutes like that. But you want to add one more point, you also can. If you have the time, if you can see that, we can add one more point there. What is that one more point is, we already advised in the answer to retrospectively include it, include the 1.6 million back to 2012. And if you have done that right, we will have a receivable amount. So we debit receivable and credit revenue for the 1.6. And when it comes to 2013, the $1.6 million receivable remains outstanding. So the receivable recognized here, and it will be brought to 2013 as well. So this $1.6 million present value in 2012 must be attracting an interest income. It's an unwinding. So I show you the entry. This is for reference only. Okay, for reference, we debit receivable 1.6, credit revenue. Okay, 1.6. I assume a bit smaller for you to see. Okay. Then this receivable, when we bring to 2013, we'll add one more interest income inside. Okay, so let's see. There is an interest income of 1.6 times 6%. 1.6 times 0.1 there. So the double entry is only for your reference. You don't show them in the exam also. That's also okay. It's only for reference. Okay, done already. We try to look at the next question to see what will happen before we go for a break. Okay, next one. Now, next one is not actually a past year question. It is an example extracted from the accounting standard. So, although it's not a past year question, but when examiner set questions for the related area, the examiner will always refer to the examples in the accounting standard. It will ease his work up a little bit. So he will use some of the examples and modify them to the exam question. Not every time, but quite a lot of times. He will refer to the examples in there. accounting standard. So this customer royalty scheme, oh, there's one L missing out. Okay, customer royalty scheme, and also, oh, this one is past question, right page. So only the customer royalty scheme is not a past question. So what this is those member card. You apply member card. Then when you buy things from the shop, you can collect points by putting the card, the point. Okay, so let me ask you a question. So says we apply what member card? Can you give me an example of member card? Let me use your example. Because if I use my example, then maybe you never heard of that before. Anyone can give me an example of member card that we can collect points when we spend money in the shop? Petrol station, or okay, I got a Petron card, Starbucks card, Watson card. That's great. I got Aeon also. Okay, Aeon member card. Petron, Starbucks, Watson. Starbucks member card. No, I don't drink Starbucks often. I know they got a touch and go card or something where you can reload money there and then you use the card to make payment. Is that same as the point card, the royalty card? Or is it just a touch and go card, a payment card? I saw people using that and I don't drink Starbucks often. At most only once a year. I drink Starbucks. Very expensive. Drink the better healthier and cheaper. So Shuba, do you have a Starbucks card? Can you share with us? Oh, one card. Gary say one card. One card is one utama. Right, one utama, one card. That is why I don't have. I will go to one utama like once a year, once in 2 years. Okay. I go Mid Valley almost every week, nearer to my place. Okay, there's no news. Oh, Shuba come back already. Shuma, I was asking you a question. Do you have a Starbucks card? Yes, So I saw people using the card to make the payment. Is that the same card that you're mentioning? Oh, it's the same card. So what if you do not have money inside the card? Can you still collect points by showing the card? There's no reply already. So okay, yes, those time, but it's been long I didn't use them. So it works that way, right? It's same as my Aeon card lah. My Aeon card, I can top up money to that card inside. Other than using it to collect point, I can also use the card to make payment. If my card has no balance inside, then I will just show the card to collect points only lah. If I use the card to make payment, I get double point. If I just show the card without using the card to make payment, I get a single point. So this is to encourage us to use their payment systems. But if you want to enable the member card to have the money stored inside, right? This one you need to get bank negara approval because it forms some form of deposit and you need to get certain banking license from bank negara in order for you to collect deposit from customer to be reloaded to the card back. It is some complicated things that you have to go through. Okay, now let's come back here. Let me ask you this. When we use the member card to collect points and we can use the point for future redemption. So let's say some shops will enable us to use the point to offset the payment. So let's say if I got 1,000 point, I can use that 1,000 point to offset 5 ringgit for the payment. Some shops, right, they say points cannot be used for payment, but if you got enough points, then you can redeem free gifts. Like what happened to Parkson card. I remember I used to have one. I don't know where I throw it already. The Parkson card, you can get cash voucher or you can get free gifts. I think free gifts are all useless one. You don't really feel fancy when you look at these free gifts then. So my point here is, do you think as a customer, those points are free for us? And from a customer's perspective, alright, so this is what we get. We apply for member card and then we shopping at the place. When we make payment, we show our member card so they will do recording for us, giving us the points. So, okay, Shubha said no, as we have to spend in order to obtain those points. That's right. Correct. So, as a customer, we pay for the product and the points. We are buying two things. The shop is selling two things here. Okay. Now we don't got two things, right? Are the product and point representing two separate performance obligation? That means each of them is independent, or the two are combined. Performance obligation. They are closely related to each other. Okay, there's a close bracket just now. So look at the messages, think about it. Now, do I recognize as a seller now, because we are considering revenue, do I recognize two sales? Sale of product separately, sale of points separately, or do I recognize them as one combined sale? It's only one. Okay, Jing Hong say, I think it's combined performance obligation because in order to get points, the product need to be bought as closely rated. Okay, this is a perfect example where student misunderstood. Okay, we give product and point together. Okay, that is right. That is the point that Zheng Hong is making. But in order to recognize the revenue, right, we look at the performance. Okay, now for product, let's say for example, product The customer purchase toilet paper, for example. So we give the toilet paper to the customer, and after that, we do not have any more performance, right? I mean, at that point when we are giving the toilet paper, after that, what to do with the toilet paper is all up to them. But the point, right? The performance regarding the point is not just about giving the point alone, you know. After we given the points to the customer, we probably will tell the customer these points are valid for 2 years. So within 2 years, you must come back to do redemption. If 2 years you didn't do redemption, then the points will be forfeited, will be burned, forfeited, no more. So you look at from the perspective of the performance, the product after we sold, that's it. Wash hand, clean. But the points we still have to wait for 24 months for the customer to come back. And then I can see almost in every loyalty program, the claims of the points will be independent from the product that we sold. So let's say the customer purchased a toilet paper today, and we give 10 points to the customer because of the toilet paper. And after that, the customer come back when they claim, right? They most likely can claim for other things. It's not just for toilet paper. And the customer can also decided not to come back to claim. Some customer maybe no longer visit us, like what happened to myself and Parkson. I remember I got a card, but I don't visit them that often anymore. I lost my card. I also got bonus link card. I don't know where I put the bonus link. So I'm sure I still have some points inside, but I didn't go and claim anymore. Now, what do you think about this? If the customer didn't claim the points within 2 years, do we call the customer, hey, you didn't claim your point regarding the toilet paper, so you cannot use the toilet paper anymore, you're going to give me back your toilet paper? No. The performance seems to be separate. Although we are offering to the customer at the same point for the two things, the product and the points, but our performance are actually quite independent. We are performing the sale of product and redemption of the points independently. So Cheng Hong's explanation was, in order to get the points, the product need to be purchased, so they are closely related. This is a very typical example, very common example where students confused, misunderstood as to what is performance obligation. It is not at the point of giving, you know. It is after that. What do we have to do? Our performance obligation. So the product, sales, and point sales are two separate performance obligations. So seller will recognize two sales. Alright, so try to look at the messages, try to digest, especially to Cheng Hong. Cheng Hong, you can think about it. If you get it, that's good. If you cannot get it, you can continue to ask questions. So I look at the clock. We've been having classes for almost 2 hours. It's a good time to go for a break of 20 minutes. After 20 minutes, then we'll come back to look into this particular question, settle it before we look at the next one, package and payment. So I see you after 20 minutes. If you've got a question, you can post your question to the chat box. Customer royalty scheme, or sometimes we call this customer royalty points or something. Okay, so let's read the question. The seller has a royalty program, customer royalty program, that rewards the customer with 1 point, 1 customer point for every $10 of purchases. Each point worth $1, redeemable for $1 discount on any future purchases. I mean, from practical point of view, this is a bit ridiculous because the customer spend $10 and then you give $1 the point, it's like 10% discount. In real life, the customer will probably have to spend $100 or $1,000 before they get 1 point that can be redeemed for $1, something like that. But then anyway, we're going to follow the question then. Spend $10, get 1 point, and 1 point worth $1. During a reporting period, during a year. The customer purchased product for $100,000. So this may be many customer combined and earn 10,000 points that are redeemable for future purchases. Consideration is fixed. Standalone price for the purchased product is 100,000. So the product 100,000, the point 10,000. So we have $100,000 collected from customer. All right, so we're going to break this into product sales and point sales. Break them into two. They say the standalone starting price for the product is 100,000. So assign this as 100,000. And a standalone for the point 10,000 point, $1.1 is $10,000 for the point sales. We're going to do some mathematics calculation to prorate the money collected from customer into product sales and to point sales. So I can see the product get more revenue because product on standalone basis more expensive than the points. So the point get less sales, less revenue amount. The entity expects 9,500 points to be redeemed. Now, even though we have given out 10,000 points, maybe not all customers would like to redeem. Some might just leave us for good, will not want to come back. Some they continue to come back, but they don't bother to claim the points. So we expect, based on our experience, only 9,500 points to be redeemed. Then in this case, what I'm going to do is I'm going to change this to 9,500 even though we have given out 10,000 points, but it seems like got 500 points they are not to be redeemed by the customer. At the end of the first year, 4,500 points have been redeemed. The seller continues to expect 9,500 points to be redeemed in total. At the end of the second year, 8,000 points have been redeemed cumulatively. Cumulatively means accumulated. Accumulated. Entity updates estimate of the point that we redeem now expect a total of 9,700 points to be redeemed. So to this answer, I have to break my answer into like four parts. The first part is to argue that the product sales and the point sales are separate performance obligation. That's the first part of the answer. Second part is to go into the calculation to allocate $100,000 collected from customer, break this amount into product sales and point sales. So this will happen at day one when we sell the product to the customer. So that's the second part. So first part to argue separate performance obligation. Second part is to calculate how to allocate the transaction price into two components. The third part is to talk about at the end of the first year, and the final part is to talk about the end of the second year. So you got four parts of the answer. There's no marks given, but we try to go as far as we can. So let's do one thing at one time. Slowly take down the answer, do discussion. If you got question, you ask. Then we move on to the second part. Repeat the same process. Move on to the third part. Repeat the same process again. Okay, so IFRS 15, page 11. Royalty scheme. Oh, this is double bracket. Yeah, miss it out. In total, it's like this, huh? Okay, you take down the answer first, and then seriously, if you anything not sure, please don't feel shy to ask. Huh? Okay, so I think I've done this. If you need more time to copy this, please let me know. So we now have to go back to the question to look at exactly again what happened in the first year. Finish that, then we look into what happened to the second year. Okay, so let's go back to the question. First year, 4,500 points have been redeemed. Now, the customer can redeem up to a maximum of 10,000 points because we given 10,000 points out. Although when we do accounting, we always perform a best estimation. We want to make our figures as realistic as possible. Again, it's substance over form, as realistic as possible. And we think that the most realistic obligation to the point is only 9,500. Got 500 points, the customer would not want to claim. But we have to also bear in mind that at the maximum they can claim until 10,000. So that's why if you look at in the second year, right, we revise the point redemption to 9,700. We start to feel that certainly more and more customers come back to claim, and I think the estimation has to be increased slightly. So first year, 4,500 points have been redeemed. It's not a full amount yet, and we continue at the end of year one to expect only 9,500 points in total to be redeemed. So the revenue from sale of product is right at 1 point when the control of product transferred to the customer. The revenue from sale of points is recognized over the future period as the customer redeem the point. The end of year one, point revenue equals to 8,676. Yeah, this one in total, and we're going to break it to 4,005 redeem. Okay, this one. Okay, then what happened to the second year? Let's go back to the question. Okay, second year, cumulatively 8,500 points have been redeemed. Now, cumulatively means inside this 8500 contains the 4500. So the accumulated point in total, 8,005. Then the entity updates its estimate and expect now in total, it should be 9,700. Now, let me show you something. Initially, in day one, we expect the point redemption to be 9,500 points. So we have already allocated the transaction price to product and point sales based on this structure, 9,500 points. All right. So 2 years later, suddenly they say they want to change the estimation from 9,005 to 9,007. Now this is okay. I mean, we can understand. Estimation is just an estimation. It can never be accurate. And we are encouraged to revise the estimation regularly so that our estimation is as realistic as possible. But the problem is, if I change my estimation to 9,700, then that means in day one, when I break the revenue allocation, I use the wrong basis already, isn't it? Because I use 9,005, and now you say you have to use 9,007. So let me ask you a question. To change the estimation from 9500 to 9700, you will adjust the figure. Uh, Wait, I'm typing something here. So this is my question to you. To change the estimation, change the point 9,500 to 9,700, do we adjust the figures retrospectively or prospectively? It might be prospectively. So it might be. Is it confirmed? And why do you think it might be? Is there any hint or any points from the accounting standard of the question telling us that it might be retrospectively? So anyone else would like to offer opinion? Is it retrospective or prospective? While I'm waiting for Shuba reply that why is it might be retrospective? Okay, can't it say prospective? Because it doesn't seem like a policy change. So we have only two types of changes, retro and prospect. Retrospectively is for changing accounting policy and correction of error. Prospective is for changing estimation. So this one is not a policy change. Okay, I didn't see there's a policy change. They're still maintaining back probably the same policy, but they are changing their estimation. Things that can never be foreseen accurately in advance, and they're changing that. And this doesn't seem to be a correction of error because no one can say a 9,005 is error. Now, if you say 9,500 is an error, then what is the correct one? No one can tell. It can be 9,007, it can be 9,750, and no one can tell accurately. So this one is obviously a change in estimation, and there's no might be Suba. It is confirmed as prospective adjustment. Now, if it is a prospective adjustment, we will enter into end of year 2 now, and we do not need to go backward. No need to go backward to change the structure. No need because it's a prospective adjustment. We perform a forward change, and there's no need to change whatever that we have done for year 1. No need. We just move forward. The change, okay, am I sharing the spreadsheet? Yes. The change of total point redemption is just prospectively because it is an estimation change. A revised redemption is calculated. Okay, I'll revise. Redemption to date is calculated, and the redemption recognized in year 1 is excluded in order to get redemption value for year 2. You see the formula changed already. I use 9,700 now. Okay, I think you have done this. We're focusing very well here. Let's move on then to the next part. Breakage and prepayment for future goods or services. Now, breakage and royalty points can sometimes cause confusion, okay, because they are quite similar, but they're actually different. At certain point, they're quite similar. If this is a member card, right? This is a member card. Then this is the gift card. Prepayment or prepaid. The difference that gift cards, prepaid cards. So sometimes the student might confuse between the member card to collect loyalty point and the gift cards then. I think the main difference are class, okay? For royalty cards, member cards, and gift cards, the biggest difference is for royalty cards, the revenue is hidden inside the product sales. So we will not tell the customer, you have to pay for the point. We won't tell them that. If we tell them that you have to pay for the points, right? The customer will most likely say, then you don't sell me the point. I only want the product. I don't need the points, isn't it? So the revenue from the point sales under the royalty scheme is hidden, and we need to estimate the amount out. Whereas for gift cards, right, the prepaid card, right, we tell the customer straight away, I'm selling you the card. I'm not hiding any information, but I'm just selling you the card, and you can use the card. So I can see the revenue calculation for gift cards and prepaid cards will be more straightforward than the points card, the member card. Because this one we really need to estimate and we need to break the allocation. How much to the product sales and how much to the point sales. But to the gift cards, we don't do that. So let's have a chat here. Okay, let me ask you a question. Anyone here purchased a gift card before or received a gift card? Now I have 17 in total, including myself, but mostly it's either Suba, Kate, or Cheng Hong. Cheng Hong today also quite quiet. No. The rest, can you share? I mean, I'm not going to buy, okay, so don't worry. So Suba never received and never purchased a gift card before. But anyone have that experience? Yes, okay, Jiman, can you, are you the purchaser or are you the receiver? Receiver, okay, that's great. Uh, Maybe you receive a gift card with 10, 20, 50, or 100 ringgit inside, and then have you claimed? I think most likely yes. Have you claimed the gift card? I mean, you go and buy that something and pay using the gift card? No? So, what a waste. You don't want next time you give it to me lah. You didn't alright. Okay, never mind. Anyone else like to share before I tell my story? It's not a great story lah, but I received a gift card before. Okay, no one else already. Okay, Gary, yes, as a receiver, purchased Google gift card before. Okay. I received before. I never purchased before. I received before. Uh, it was a Uniqlo card. Exact amount I cannot remember lah. It's 100 or 150 for my daughter birthday. It's not actually for me lah, but it's for my daughter birthday. So I got that card and I went to KLCC branch, Uniqlo. we redeem something. But you know, as an accountant, we are very calculative, right? So to the end, I think after we chosen the things that we need, and we still have a balance there of some 10 or 19 ringgit or something. So we cannot find some equivalent value to be 10 or 19 ringgit. And if we choose the next item, we have to top up already. So my wife say, okay, why not we leave the balance inside? Because now we really cannot choose another thing already. We already got what we need. So we leave the balance inside. It has an expiry date of about 6 months. So we'll come back next time when we really figure out what we need and then only we come. And if we need to top up, we will top up. But for now, we will have some balance inside the card. And the thing is, we never go back the second time because the validity I think is only for 6 months. And we didn't go back to the other time. But we don't redeem the balance then. So like what happened to Jiman just now, he didn't redeem the card. Seng Yong, you purchased the Google gift card to your friend. Did your friend redeem that gift card? Or how about Harry, do you redeem the card? Use for yourself. Or do you finish using the credit inside? Or finish using it? Okay. Alright. Now, if you didn't use the card, or like my case, didn't finish using the balance, right? Okay, so we can, okay, we say fully redeem. Okay, very good. But my one, I didn't fully redeem it. So we have a bracket if you didn't fully redeem it. So bracket means uh, unused balance in the gift card or prepaid card and left expired. That is called a bracket. At least for accounting bracket. Bracket in warehouse means different thing. That means the damaged goods bracket. But in accounting here, bracket means unused balance in the card and left. So don't confuse between point card, this one for his scheme, and gift card, prepaid card. The point card sales is hidden inside the product, but gift card is transparent. We'll be very open. We are not hiding from customer. We tell the customer straight away, you buy $100 gift card and that's it. I'm giving you this gift card here. So the calculation for revenue is supposed to be more straightforward that you do not need to estimate like just now, how much is for product sales and how much for point sales. So let's read the case here. This is the actual past question. Advise Johan on the accounting for the revenue. The company Johan purchases telephone handphone from manufacturer for $200 each and sell the handset direct to customer for 150 if they purchase 4 credit whole card in advance on what is called a prepaid phone. So we tell the customer, if you buy our prepaid card, then only you can buy this phone at a special price of 150. Okay, so let me ask you, as a seller of phone and prepaid card, are the phone and card to be separate or combined as one single performance application? So that means the performance of selling phone and providing core services via the prepaid card are depending on each other or they are independent from each other. So just now Jing Hong made this mistake. So Jing Hong, would you like to try another time? It's not at the point of giving, it is the performance after that. That's why you're so quiet today, Try lah. It's not at the point because your thinking was at the point just now. The sale, You have to buy the prepaid card before you can get the phone at a special price. So just now you thought at the point of selling they are related. But I explained already, it is not at the point of selling we decide. It is after sales, the performance after that. For anyone who would like to try, phone and card. I know we are selling it as a package, but are the performance separate after that or combined that they are relating to each other? Okay, can classify as single SIM both performance obligation are same, hopefully correct. Okay, that is Shubham opinion. Anyone say it's separate? Can I get a different opinion? Separate lah, since just now also separate. Okay, then I tell you a story, a real story of mine. Now, years ago, really many years already lah. Okay, not really that many. I think some 6 or 7 years ago, like that lah. Okay, uh, I I am using DG all this while. All right, DG. Before DG, I was using Cellcom lah. Then I port to DG. And that time, some 8 years like that, starting from 8 years ago like that, it's very popular to have a postpaid plan from a lot of telco. That if you sign up for a plan, commit for 2 years, then you get either a free phone or a phone at a cheaper price. I think now they are also doing a similar thing, but I don't see free phone anymore lah. So that time I got this offer from DG that I need to sign up a plan. The plan is lousy lah. Pay 78 ringgit 1 month and get only 1 gig data, 1 gig. But if you look back to like 6 or 7 years ago, that is the market offering. Now we get at least 20, 30 gig or 50 gigs. But those days we get only 1 gig of the data. But got to pay 78 ringgit every month. Then they also got some core things all inside lah. And I will get a free phone, which is an Asus phone. Now we call it Asus, but globally call it Asus lah. This brand, okay, this brand. So we will get I'll get a free phone lah. But I already have my phone, isn't it? I was using HTC that time. All this branding all dead already lah. Okay, I used HTC that time, so I got a SIM card inside. Changing the plan, I do not need to receive a new SIM card. They just do a changes to the system, and I will covered by the new plan already. Then they posted me the phone, Asus phone, Asus phone. I didn't use it, and I gave it to my wife. So my wife used the phone. I signed up for the plan, and I got a free phone. So to them, they are giving me at the same time, isn't it? Giving me at the same time. But as a customer, I can choose not to use that phone and continue with my HTC, and my wife is to use the free phone. So as a customer, I can enjoy the benefit of the call plan, data plan, and the phone separately. I do not need to insert the SIM card to the new phone. I don't need to do that. But I can continue to enjoy the call plan and the phone separately. Now, as a free phone, we don't have much expectation on it lah. So it felt not premium. And then the worst thing to me, I cannot accept is a vibration. When got call or messages coming in, the phone vibrate, right? You can hear the hollow sound inside. It's like a toy. I think sometimes to the point that it's worse than a toy when it's vibrating. But as a free phone, we don't complain too much. We use it for about 2 years and then we change phone. So can you see the point then? I signed up for a plan, I got a free phone, but as a customer, I can use the plan, call plan, and the phone separately. To the telco performance, it's also separate. They send me the phone and they activate the plan for me, and they don't call me and say, "Hey, Mr. Ng, are you using your Asus phone?" I say, "No." "Okay, if like that, I terminate your service." No, they don't do that. They don't even care whether I'm using the phone. And they didn't say, "Okay, Mr. Ng, in order for you to activate this plan, you must insert the SIM card inside that free phone before you can use it. But no, they didn't say that. To them, the performance are separate. To me, the benefit are also separate. So they are separate. So let me read this question a bit further to see whether the customer must really insert the prepaid card inside the phone before they can complete the services. Okay, so let's go on. So now the story again, we buy handphone from manufacturer. That's our cost of 200 and they are selling at a loss, isn't it? Sell at loss. So the phone alone is selling loss. As the loss leader, if the customer purchase prepaid card. The cost of selling handset are estimated to be $1. So the NRV is 150 minus 1 to be 149. So this is important for inventory valuation. Customer using a prepaid phone pay $30 for each core card. Core card expires 6 months from the date of first sale. There's an average of unused core credit of 10% per card after 6 months, and the card is activated when sold. So far, I didn't read any part in the question yet that the customer must use the same phone for the core card. They didn't say. So probably in this case, the customers are free to decide whether they want to use this cheaper phone, 150, or they can give the phone to someone else, continue with their existing phone. 10 customers purchase the phone at 150 and also the core card at 30 per card before the year end. Total use credit $90 as at the year end from this 10 customer. None of there's an E missing out. Okay, none of the card is expired. They are still activated. 50 phones remains as inventory. So about this 50 phones, right? We're going to use 50 times NRV of 149 to have a closing inventory valuation. Okay, let's see. 17450. This is a closing inventory value. Okay, so closing inventory valuation settled already. Next is we need to talk about the core card. Okay, separate out phone sales, core sales, and to recognize the revenue. Okay, see that answer. This is page 11. 7050. Okay, let me go back to the question to look at the prepaid cards arrangement again. So this is the game here. The customer got to pay $30 for each card, and they got 6 months validity period to use that. Card is activated when sold to make the calculation easier. If you need to put it to practical, it's more difficult because some customers purchase the prepaid card and they do not activate the card immediately. They may activate the card 2 months later. So we have the sales date and the expiry date not to be exactly 6 months. The question tried to make things easier to say card is activated when sold, to make the calculation easier. Okay, so here is the arrangement. Let me find a space to do that. So this is month 0 to month number 6. Okay, 6 months validity period. Pay $30. On average, there's a 10% card unused credit in the card after 6 months. So these are forfeited if you didn't use. Okay, you see, when I recognize revenue, I know I'm going to recognize 90% revenue in the first 6 months, 90%, because customer on average only call up to 90% of the credit, and 10% they didn't call, right? So ended up, I will have a situation like this. I'm going to recognize revenue of 27, which is that 90%. And then here at this point, I will recognize another 10%, which is that $3 to complete that $30. Do you get what I mean? They will call for 6 months, but they are only using 90% of the credit. The 10% unused after 6 months is forfeited. They cannot claim back the money. But it becomes our revenue already. Based on IFRS 15, right? This is not the way we recognize revenue for breakage. Okay. Now, based on the estimation, if we know the breakage to be 10%, then what we're going to do is something like this. Let me draw you a new timeline here. So this is month number 0, which is day 1, and this is month number 6. Okay, now look at this. Put down your pen if you're writing anything. Put down your phone if you're playing games. Look at the screen. Listen very, very carefully. Listen. I had this first example just now, but I crossed it out already. I read the question and I know that the customer will only utilize 90% of the per card, which is equivalent to $27 per card. After 6 months, they still got on average 10% of the balance inside, but they cannot use it anymore, so we forfeit that balance to be $3. So recognizing revenue, $27 for the first 6 months, The balance 10%, $3 recognized after 6 months is not allowed by the accounting standard. What is allowed by the accounting standard is, if you know they're going to use $27 for the first 6 months, and the best estimation of 10% breakage will happen, right? So the 10% is confirmed as revenue already lah. So you got to recognize $30 within the first 6 months. You don't recognize 27 for the first 6 months, then after 6 months only kick in the $3. No, you don't do that. You don't do that. You have to progressively recognize the full 30 within the 6 months. Okay. Hang on, I got a message here. Why this case? I don't quite get your question. What do you mean by that? Why this case? What is the meaning of why this case? Why we capture full revenue for this case? Okay, now the old IAS 18 requires revenue based on actual utilization. That means when customer call $1 credit, we recognize $1 revenue. Now look at the chat box now. The old account, we don't learn IAS 18 anymore. We are using IFRS 15 now. So the old version is easily understood that if the customer use a credit for $1, then we recognize $1 revenue. IFRS 15 uses a different approach to prevent off balance sheet items. So we do not want to hide information from people. If we estimate 10% is a breakage, so that means we confirm we'll earn that 10% eventually, and we do not need to wait until after 6 months, only we recognize that 10%. So IFRS 15 requires revenue to be recognized at 100%. That means if the customer call $1 credit, we recognize revenue $1. Let me see how much it is. Okay, 1.11. So we recognize $1, which is 90%, and 0.11, which is that 10% breakage at the same time to make revenue at 100%. Now read the messages in the chat box. After that, tell me whether you understand. If not, we'll continue to discuss then. Okay, great. So the rest, are you okay? If not sure, you ask again. So now if I look at this unused call credit, not unused, total used call credit at the year end from the 10 customer 90. So our revenue will be 90 divided by 90% times 100% equals to $100. The calculation can change a little bit. If the bracket is 20%, then we divide 80 times 100. If the bracket is 30%, then we divide 70 times 100, like that. It depending on the facts on the question here. Right, so you please update whatever writing that you need to update on the question. Think about it. If you have question to ask, please ask, and I will start giving you the answer in a short while. Okay, move on. Yeah? Let me give you the answer here. Okay, finish. If you need more time, please let me know. Now we move on to the next one. Okay, next we have this one last question broken into two parts. What I want to do with you is I will discuss B1 and give you the answer now for B1. I discuss B2, but the answer I will give out as a PDF file to the e-learning portal there. So this one you can try after you got the points from me, you can try writing out your own version. and compare your answer with the PDF file on the e-learning portal. And then we can end the class already. So we don't have no time to start IAS 19. But anyway, this is planned for next class. Our next class, go back to the normal Wednesday and Saturday combination already. A few days later, just a few days later, I'm going to see you to talk about the employee benefit lecture. Okay, so let's look at our one last question. Requirements say, discuss how the above two contracts, B1 and B2, should be accounted for under IFRS 15. For B1, the discussion should include accounting treatment up to 30th November 2016. In the case of B2, the accounting treatment up to only 4th of December 2015. So read the requirement carefully to how far you should go to the calculations, the explanation. So B1 is until 2016 and B2 is only until December 2014. Specifically, it's 4th of December 2015, not until 16. So we look at B1, which I will discuss and give you the answer at the same time. 4 marks. The company entered into a contract with the customer to sell an existing printing machine such that control of the printing machine rests with the customer in 2 years' time. Now, when they say like this, control to be transferred only 2 years later, then the revenue will be 2 years later. Yeah, revenue not now, not a bit in year 1, a bit in year 2. No. Revenue full amount 2 years later. Control in 2 years' time. Not over 2 years, in 2 years' time. The contract has 2 payment options. Customer can pay $240,000 when the contract is signed. So this is 2 years in advance, or $300,000 in 2 years' time. So this is when customer get control. So we tell the customer, if you pay 2 years in advance, you get good discount. If you pay when you get control, then you pay for normal price. No discount, 300,000. Interest rate implied in the contract is 11.8% in order to adjust for the risks involved in the delay in payment. However, the incremental borrowing is 5%. Now, customer decided to pay in advance 240,000 when the contract was signed. Okay, I know when the timing to be ridiculous, like for example, we allow the customer to pay 2 years later, or like in this case, we ask the customer to pay 2 years in advance. We believe that there is a significant financing component involved inside here. If there's a significant financing component, we need to calculate the interest. This question, we ask the customer to pay us 2 years in advance, and this will be perceived as a borrowing from customer. So we ask the customer to finance the construction of the machine or something. So we are taking a borrowing from the customer. If we take the borrowing from the customer, we have to show our interest expense to calculate the interest expense. Okay. We have an example. If you want to do a revision at home, this B1 relates to one of the examples on page 2, significant financing component, right? The second example, we sell to customer but ask the customer pay upon signing contract but deliver 2 years later. Unfortunately, here it's totally blank because I didn't save the writing. But if you want to, is page 2, the example H. So let's write down there. Okay. Refer page 2, example H. So you can do that after the class. Now I'm going to discuss and give you the answer. So I will talk in my answer here is something like this. Asking the customer to pay 2 weeks in advance before we transfer control is in substance a borrowing from the customer. So we got to recognize our interest expense for the 2 years. Over the 2 years, we'll debit the interest expense and credit to the liability as a borrowing. After 2 years, when we transfer the control of the machine to the customer, then we will reclassify the liability to revenue. So no revenue before we transfer control. But we got a big question here. When I want to calculate the interest expense, surprisingly, the question is giving me two interest rates, 11.8 and 5. Now this is a bit rare because I've seen a lot of questions that only give us one interest rate and then we just do the calculation accordingly. But when we see two interest rates here, then we'll stop. Which one to go for? 50-50, right? 50-50. Just like sometimes the movie, with a bomb, there's a time bomb counting down, still got 1 minute. So we have to decide to cut the red wire or the blue wire. It's something like this. But in exam, you shouldn't be bothered. Because in exam, if you cut the red wire, let's say, or the blue wire, you still pass the exam. This is not a Hollywood movie. Why is it so? Because you got 4 marks, right? When you start to talk, asking the customer to pay 2 weeks in advance is like a borrowing. You start to get marks already. We need to recognize interest expense over 2 years. You start to get marks already. After 2 years, when we transfer control of the machine to the customer, we reclassify the liability, which is a borrowing. Revenue, you get marks already. So as a minimum, you get 3 marks out of 4. You don't know whether you should go for this. You don't know whether you should go for that. It doesn't matter at all. Either you don't calculate at all, or you simply choose one to do calculation. You are still very good. Walk away with 3 out of 4. If you do calculation, you've chosen the wrong interest rate, the wrong one, you may be still getting 1 more mark for the calculation. So this is the beauty of it. But I can tell you, some students, right, in the exam hall, they are very funny one, They will say, see, in the exam, sometimes we do not react properly. In the exam, some students will do like this. They read the question, they say, I know. This was in the teacher's notes, page 2, example. I remember this. I did this yesterday and today is the exam. Okay, I'm quite good here. And then when the student see this and this, the student like, I think the lecturer notes only got 1 interest rate. And now in the exam question, we got 2. Never see this before. Which one to go for? Don't know. Don't do this. Go and read this. Some students will do like this, Just because of 1 point they are not sure, they abandon the whole question and then move on. I got a student before, she let go the full 25 mark question because of 1 word, control. So she read the question halfway when she see control, right? It's like a red button to her and she abandoned the whole question, 25 marks. After the exam, she WhatsApped me. She told me about this. I forgot whether she called me or WhatsApped me, but I felt very upset. I told her, why? Because of 1 word. Not even a whole paragraph. It's 1 word and you abandon the full question of 25 marks. Instead, I don't know. At that time in the exam, I think that is the best decision. No, it's not. The best decision is you don't sign up for the exam. You give me the exam fee. Belanja me lunch or dinner, whatever. That is the better decision. When you abandon the whole question of 25 marks just because of 1 word, control. That question talks about parent and subsidiary and the group account. In theory, so she abandoned. What a waste then. But eventually, she still passed the exam. It was 50 or 51 or something like that. So good to her. But I don't want you to try your luck. You got anything not sure? If it's just 1 part, that is just 1 part. You continue to do the question, do your answer. and don't abandon the whole thing here. So which one to go for actually? Now, it is already not important to decide whether it's 11.8 or 5. You still pass your exam regardless of. The proper answer, correct answer is 5% because it reflects a borrowing 5%. Okay. So next time if you see a situation like this, choose a borrowing rate to reflect the borrowing. But honestly, if you've chosen the wrong rate also, it makes no difference to your grade. You're still passing the exam. Is it still 11 or 12? Still 11. Yeah, extra. Just sample to you. Declassify one better. Okay, I think I've done this. If you need more time, please let me know. So for the balance time, I would like to discuss B2 with you as mentioned. The answer I will upload to the portal. It'll be quite a long thing here, but we get only 6 marks. Now, it is worth talking about this kind of nonsense that we get very long questions here, but we get only 6 marks. No, we don't really get this kind of things very often, but from time to time, you will get it. Now, if you're working, have you ever met into this kind of situation that you don't really have much time left in the office, but your boss continue to give you a lot of work? Anyone have this experience before? So your boss is giving you something that it is impossible for you to complete. Anyone? Yes, it's almost like everyday thing, isn't it? So what do we do, Shua? Is it overtime? So how do we tackle this problem? Every time that I manage to close on time, who is any more normal human example? I think most of the time we're going to use overtime, OT, to settle that. In year 2007, not 2007, years ago, like 15 years ago, by using additional manpower, that is provided you have the authority to reshuffle the manpower. Okay, so your job finished, the other man job not finished because they will be helping you to complete your job, isn't it? But in 2007, I remember that was the time I resigned from an audit firm before I joined another one. So I gave a 1 month notice. Then I complete whatever that I have. And there was still another 2 more days before my last day. Actually, I used the annual leave to offset. So I can resign like 5 or 6 working days before my actual date. So there are still 2 more days before I go into my annual leave to offset. So 2 more days. So I should not receive any more new files. I should just focusing on helping my other colleagues and seniors because I cannot handle a new job anymore. Just got 2 more days only. Then my audit manager gave me 2 new files. So I have to start 2 new audit to audit pension funds. So I told my manager I cannot complete it. 2 more days and I cannot complete it. So my manager said, you do as fast as you can. Okay, you do as fast as you can. So okay, I try. Then she gave me one assistant following me out to the client place to audit the pension plan. Two also pension plan. They call it benevolent fund. One benevolent fund, another one is pension fund to audit that. So true enough, I cannot finish. So I tried to use overtime, the first day and the second day. The second day was my last day. So I told myself, this is my last job in this audit firm. I got to complete it no matter what. If I need to sleep here, I got to sleep here tonight. And then tomorrow I will be on 5 to 6 days annual leave, still paid. I will enjoy my life before I start my new job in my next audit firm. Then on the final day, the whole firm, they decided to close the firm earlier at 7 p.m. like that because they bought movie ticket and they're going to watch the movie together without me obviously because I already resigned, so I'm not one of them anymore. So then I said, hey, I haven't finished my job. Then my senior told me, never mind, you come in tomorrow. Manager also said you come in tomorrow. So what is that tomorrow? There's no tomorrow for me anymore. Today is my last day. I know tomorrow I'm still on the payroll, but legally it's my annual leave. I'm going to offset my leave before I start a new job. So I'm not going to come in tomorrow. So I told them otherwise. I said, oh, okay, tomorrow, okay. So what I did was I pack up. I do filing, punch hole and this, that, pack up, and I put the file aside. I go home and I never go back to the audit firm anymore. Never. Because there's no more tomorrow then. No more. So what happened was I think I did something like 40%, 60%, just leave it there. After a few days, my manager called me, not asking me to go back, asking me, where do you keep the soft copy? I'm assigning to another staff to do. In exam, it's like this, right? You have no overtime. 3 hours means 3 hours. Last time human, now computer. You cannot tell the computer, hey, OT, we OT 2 more hours, I haven't finished my question yet. Cannot. So in exam, if you get something like this, ridiculous, long question, but we only 6 marks, we get about 10 minutes to do this. You just do as much as you can. You probably read this, you read this 2 times, it's already 5 minutes, 2 times, understand. Start to plan your answer, start to execute your answer, and probably maybe you reach until here, let's say, it's already 10 minutes. And that's all to see how many marks you can get from here. Maybe 2, maybe 3. That's the best that you can get. This question is not possible to get full 6 marks. Now, even if you ask me to go in, right, as a teacher, obvious for this paper, I'm not confident enough to say I can complete this whole thing in 10 minutes time. No way. Examiner come in, examiner of course can, because he set the question, he knows the answer. Of course, in 10 minutes he can settle this. But we are reading this question for the first time. We cannot. 10 minutes cannot. Maybe 30 minutes can, but 10 minutes cannot. So my advice here, you just do as fast, as far, as much as you can. That's all. How many marks that you'll be getting, that is not your control anymore. You only get 10 minutes. So let's discuss, but I'm giving you the full answer. Okay? In exam, you just do as fast as you can. Enter into a contract 1st December to construct printing machine on the customer premises. So this is revenue over time. Done at the customer side. We saw one question in the early morning, right? We're going to do construction at the customer's premise or customer land or something. Okay, revenue over time. For a promised consideration, this is the total revenue. 1.5 million. With a bonus of 100,000 if the machine is completed within 24 months. Now, this is called a variable consideration. We might or might not be able to earn the bonus. So this variable consideration, we have to estimate the chances. If high chance to earn it, we recognize it. If not high chance to earn it, we do not recognize this variable consideration. At the inception of the contract, the start of the contract, we correctly account for the promised bundle goods and services as single performance obligation. Okay, so no need to argue anymore. Yes, no need to argue further. They say correct means correct. Single performance obligation. At the start of the contract, the company expects the cost to be 800,000 total cost. And that means this is a profitable contract. It is important to know whether this is profitable or loss-making. Profitable, we follow percentage of completion. Loss-making, we recognize full losses immediately. Conclude that it is highly probable that a significant reversal in the amount of cumulative revenue recognized will occur. Highly probable reversal of revenue recognized will occur. Highly probable we cannot earn the revenue. Do not recognize revenue yet. If you see things like this, highly probable reversal of revenue will occur. Completion of the printing machine is highly susceptible to factors outside the company's influence, mainly issue with supply of components. Now, this happens to a lot of corporate now. They got problem getting materials, especially the computer chips. So yeah, they might have a lot of orders they cannot fulfill. So in this kind of cases, we'll advise the company to not recognize your revenue yet, because you're also not confident whether you can earn them. November 2015, it is the year end. Banks have satisfied 65% of the performance obligation. So there is no more significant reversal. You already get 65% completion. No more significant reversal. Can recognize revenue already at 65%. Okay, one more time. At the year end, the company satisfied 65%, which we think there's no more significant reversal. It's quite confirmed already. They completed more than half already. On the basis of cost incurred to date. This is our input method. Conclude that the variable consideration, which is a bonus, is still constrained in accordance with IFRS 15. Bonus, there is no recognition. The bonus was 100,000. Let me show you again. We have 1.5 million contract revenue and also a bonus of 100,000 if we can complete within 2 years, 24 months. Now coming to the year end, we have completed 65% of the progress. We are confident that we can earn that 1.5 million in total, but the bonus we still don't have the confidence. Still constrained. However, 4 days after the year end, which is what the requirement 4th of September, the contract is modified. With the result that fixed consideration and the expected cost increased by 110 for the total revenue increase, cost increase. The time allowable for achieving bonus is also extended by another 6 months, and now we conclude that it's highly probable the bonus will be achieved and the contract remains still as one single performance obligation. The modification didn't introduce any new asset. So there's no reason for us to believe that there's another asset construction going on. So the modification is regarded as one single performance obligation, year end of 30th November. Okay, so what I tell you here, we will talk about revenue to be recognized over time because we saw some indication here. Revenue is recognized only if you are confident. But in this case, we feel that there's significant reversal, so we do not recognize the revenue yet. After that, at the year end, no more significant reversal because they have completed 65%. So we can start to recognize revenue based on 65%, but bonus is still not included in the calculation. So what we can do is we're going to use the only 1.5 million, and not to include the bonus yet, times 65% completion. Bonus not included. Four days after the end, where the requirement asks us to extend our discussion to 4th of December, contract modified. So now the total revenue is 1.5 million. Bonus also highly probable we achieve. Okay, so add the bonus. Okay, so this is the bonus. And also add additional revenue. Times the percentage of completion. This is for 4th of December 2015. But 30th November, 4 days before that, at the year end, we only use 1.5 million to do the calculation. So do we use back 65%? Not quite true, because the percentage of completion is calculated based on cost incurred, and we have modified the cost already. We added new cost. So we need to recalculate the percentage because the total cost are revised. If you don't know how to calculate the new percentage, you just use back 65%. I think that's no big deal actually.
because the main thing here is to discuss the revenue change, because we, for the first time, included the bonus inside. Previously, we didn't. And then there's a modification to increase the total revenue by $0.11 million. That is already good enough. Right, so how to calculate the percentage? I think I'm going to give you the answer in the PDF file that you can download from the e-learning portal. Right, it's already 1 o'clock, so we can end the class at this point. If you have questions to ask, you can stay back to ask. Otherwise, I'll see you a few days later to start a new chapter, IAS 19, Employee Benefits. Okay, so thanks for coming today. Enjoy the rest of your weekend. I'll see you again a few days later. Goodbye, everyone.